Okay, so I get this a lot. I see this a lot. I hear this a lot. People will be thinking about investing in a certain stock. They'll ask me my opinion on it, or I see them ask somebody else their opinion on it. And at least in my case, majority of the time, I'm going to tell you that it's kind of hard to say either way. And then people will try to like force. They'll either be scared away all the way and just say forget the whole stock market, the whole concept of investing, which is a mistake, or they will still force themselves implement confirmation bias in their brain and just look for any type of information to confirm why that stock is a good decision to make, despite the despite my opinion and the reality of the situation. Not to say that my opinion is always fact, but despite the reality of the situation, understand this: most stocks are going to be unpredictable. I'm gonna write that down so y'all remember it. Most stocks, hell, most everything in life are unpredictable. That's just a fact. Does this mean that the stock market is a bad idea? Of course not. We got to understand there's thousands of stocks. Thousands. Maybe 70 to 80% of them are unpredictable. So that leaves 20% of thousands of stocks that you can find that are predictable. Beautiful thing is we live in 2020, so we don't have to search through stocks in alphabetical order until we find one. No, we have stock screeners that we could screen out stocks that so we can only get stocks that meet a certain criteria of things that are more predictable. Matter of fact, let me give you a website that you can use. Let me erase this right quick. Write this down, or type it in, or open up a new tab and type it in your address bar or whatever if you're looking for something right now. I like to use this. Finviz. Finviz.com. Go there, register. It's free and all that. I mean, it do got like a paid service, I believe. I don't even use the paid service. All you need is an email, and you can screen out whether you want the stock to be at least worth an X amount of money. I'm always talking about free cash flow and debt to equity ratios and all of that. You can screen out stocks that do have a less than one debt to equity ratio that I always teach. All right, I got other videos on that, or at least why I mention it. You can screen out if the stock is making new highs, which I always talk about. Get a stocks that are making new highs. You can screen out um, the volume. It's all kind of things you can screen for. Okay, Finviz.com. You'll see there's like 8,000 stocks in the pool. You get to screen the stuff out. You can just find the top ones that you're looking for that meets the criteria. Okay, another one that I use. They have a screening thing too. This one may oops, not this one. Wrong site. Trading View. TradingView.com. Okay? I don't know if y'all can see it, but I'm saying TradingView.com. TradingView.com. I like to use this site to look at my charts, and they also have a screener in the bottom half of the screen. You probably can find a tutorial or something how to navigate the site. I do. I mean, I can't show you how to do it right now. I have to share my screen. If you're in the course, you've seen that already, though. These are two good, powerful resources to screen out for stocks. Okay, so now we know how to screen out for stocks. What types of things are we looking for? Y'all already know the metrics: free cash flow, low debt to equity ratio. Okay, and we want these things to look predictable and consistent. So, free cash flow, right? Free cash flow. I've been preaching this for years, along with Kevin O'Leary. All right, so let's do this. So when you look at a company's financial sheet, it'll show like the past few years or whatever, right? So let's say 2016, 2017, 2018, and 2019, right? 1, 2, 3. It's past 4 years. So 2016, let's say they made 100 million, right? Then let's say in 2017 they made like we'll give them 120 million. Then the next year they made like 150. Okay? And then in this year they made like 182 million. Okay? This is a pretty predictable pattern. We see that they increased their free cash flow by about 20%. Okay? 2016 to 2017, they increased about exactly 20%. They made an extra 20 million in 2017 than they did in 2016. Then the next year, that was like a 25%. Or close to 25% increase. Same thing for 2018 and 2019. These are like roughly 20% growth rates. So it's in between a 20 to 25% growth rate. That's pretty consistent year over year. That's predictable. So now, if we know that this company, at least historically, has been increasing their free cash flows by 20 to 25% every year, and we see ain't too much change, we could take 20% of this 182 million, which is going to give us about an extra $36 million, which will have us at about 218 million. We could probably guess they're going to make around 215 to 220 million for the year 2020. Okay? Because that's a 20% increase from 182. And we want to be conservative. We want to take the 20% approach, not the 25% approach. All right? We want to be conservative in our guesstimates. That's what you want to see. All right? Now, what you don't want to see, first of all, it won't even matter what none of this say. You don't want this number to be negative anything. Okay? I don't care if it's just negative 1 million. Unless these numbers were like negative 400 million and negative 200 million and negative 100 or something like that, then they're trending up. Fine, that's predictable too, actually. But if they're not making money, we just want to skip them. Okay, we don't have to look into that, at least especially for beginners. Now, somebody like me, I can continue to do some more research and see what's going on. But you just beginner, you don't need to do that. Just skip on to the easier ones that's easy to predict. Don't worry about trying to find the lottery winners and all that type of stuff. Don't worry about that. Just find what's predictable. Something else you don't want to see is, let's start up with 100 million again. Let's say they made 100 million in 2016. Then they made 130 million in 2017. Then they made 68 million in 2018. Then they made 140 million in 2019. That's not the most unpredictable pattern. It's still worth looking at since they have increased. That says 140 million, by the way, not just 40. 140 million. Start off at 100 million, now at 140 million. That's cool. It's just a matter of what happened here. Why did it go down to 68 million? So that's just kind of, maybe. Not as strong as the last one, but maybe. Then we'll see something like, 100 million. Then let's say they made 10 million in 2017, and then let's say they made 235 million in 2018, and then they made 75 million. That's all over the place. You made 100 million, then you only make 10 million, then you make 235 million, but then you only make 75 million. It's going all over the place. That's kind of erratic. We could just skip it. Doesn't necessarily mean it's going to be a bad company. It's just unpredictable. And we don't, especially if you're new, you don't need to concern yourself with, you don't need to make it more harder than what it is. Okay? The best investors, I'm talking even Warren Buffett, all the best investors, they keep it simple. There's no reason to complicate things. Just keep it simple. If it's unpredictable, find another stock. There's thousands to choose from. Okay? I gave you the resources on how to find some stocks. I'm showing you what it would actually look like. And this type of information, like free cash flow, you can find on sec.gov. Or, because sec.gov is the best source. S as in Sam, E as in Edward, C as in car, dot, G as in Gregory, O as in Oscar, V as in Valentine. sec.gov. And we also have, I like to use this one for my first initial look into a company, which is gurufocus.com. GURUFOCUS.com. F as in Frank, OCUS as in Sam.com. GuruFocus.com. Then you'll click on the 30 years financials tab when you get to that site. And that'll show you all the bank's financials, the accounting statements, the income balance, cash flow statements, and all of that. All right. So I gave you all the tools to learn how to kind of look these companies up for yourself. If you're wondering if something is a good company, remember, don't force things, not to make things more difficult than what they are. All right. And I think that's going to conclude this video. So hope you got a lot out of it. Don't forget to subscribe or follow me, whatever platform you're watching this on. And I'll check you on the next one. Freedom over failure.